Ken Represents Mortgage Minute. Hey, today we're going to talk about what's happening in the U.S. market. We're always talking about what's going on in Canada, but some interesting news out of the U.S. It looks like the economy is rebounding and home sale values are climbing at the fastest pace since 2006. And lenders, including Wells Fargo, JP Morgan, and Bank of America, are starting to relax their lending guidelines. They're easing up mortgage lending rules and restrictions that were put in place since basically the biggest real estate crash since the Great Depression. The banks have lowered some down payment requirements in Florida, Nevada, Arizona, and Michigan. They've also loosened underwriting requirements for refinancing programs for what they call their Federal Housing Administration that fall under that. Banks are also being forced to compete harder for customers after a spike in borrowing costs from basically near record levels. As we know in Canada, we've enjoyed the same thing and we've seen a rise. They have slowed refinancing in the U.S. down by 70% and basically put a real, a hammer into the big profits they were looking to make this year. More than 10% of banks surveyed reported they have loosened their standards on prime lending and low-risk residential loans in recent months. Wells Fargo, which basically originated 1 in 4 U.S. loans, that means in the first half of this year, 1 in 4 mortgages done in the U.S. were done with Wells Fargo, began on July 13 to offer non-conforming loans. Basically, those are loans to loan-to-value ratios of 85% from 80%. So that's a big jump and a big change there. JP also removed a minimum 640 credit score, which was a requirement before. So they're trying to make things a little more lax. And basically, as I said, they're doing all of this because mortgage applications have plunged last week to a 5-year low. Refinancing, as I mentioned, dropped significantly, and it's been at the lowest level since June of 2009. Last year, refinancing accounted for 76% of the nearly $1.7 trillion in loan originations. Those are amazingly large numbers. The U.S. home ownership rate also fell to 65% this year, its lowest level since 1995. And home prices across the country have been rising about 12.1% in June from a year earlier, according to an S&P Case-Shiller index of 20 top cities. Some of the cities that were hardest hit, like Las Vegas, have gained 24.9%. Also Phoenix gained 19.8%. Detroit has risen 16.4%. And Miami, the values are up about 14.8% as well. JP Morgan also decreased their minimum down payment requirements on mortgages in Florida for primary residences to 5% from 10%, and down to 10% from 20% for secondary properties. So as you can see, they're definitely starting to relax things a bit down there. And applications on the jumbo mortgages, what they call jumbo there, which is basically mortgages that are at least $729,000, were up 59% in the first 4 months from a year earlier. So it would appear that a lot more folks are buying the bigger, more luxury homes. And loans for mortgages of less than $150,000 fell by 2.1%. So not a significant drop there, but again, a big change. Basically, to put things in perspective, since the subprime meltdown began down there, since 2007, essentially rolling into 2008, more than 7 million homes have been sold for a loss or lost to foreclosure. Those are pretty significant numbers. Again, the U.S. market is pretty dramatic in size. So, some big changes down there when you compare to what's been going on the last few years and all of the different shifting thinking in the mindset. And again, it's because record rates are no longer there. Banks are being forced to compete more aggressively, so they're loosening up the standards. Now, we've got kind of a different thing happening here where we've got the federal government stepping in and we've had a lot more tightening of the rules. Now we're seeing rates rising. Will we follow suit? I don't know. I mean, the whole logic behind what this was to protect us from a U.S.-style meltdown. And again, we'll see where things go, but it would appear that the U.S. is coming out of that slumber. The markets seem to be pretty brisk, and banks are definitely worried about profits. And the old competition is starting to creep in with banks getting more lax on their lending guidelines. Will this lead to another cycle? Who knows? But I'm sure the federal government or somebody hopefully will be watching it much tighter this time to ensure that this thing doesn't get out of control again and cause this great meltdown that we had before. Anyway, I thought I'd share that with you, some interesting news out of the U.S. Always interesting to see what our neighbors to the south are doing and how it will impact us as we go forward. It's been Cam for Cam's Mortgage Minute. Anything you need mortgage-wise, don't hesitate. Give us a shout at the Auxilium team. We're always ready, willing, and able to help. Enjoy your day.